Good afternoon, everyone, and a very warm welcome to all the attendees who are dialing in and have been dialing in to today's webinar with Matchmaker Ventures, where we look at the very exciting topic of startup innovation and whether they can be a shortcut to corporate innovation. We are basically starting from the assumption that, and also the knowledge and experience that startups today have developed to be a very significant source of innovation, that corporations are in need of transformation. So the question is, are those going to be matches made in heaven, or are there any obstacles on the way? I'm going to do this today, and I have the pleasure and the honor to welcome our guest speaker, Marco Bosma, from Rabobank, where he is a Senior Vice President for Fintech and Innovation. And we're going to host this webinar today together, and he will particularly have a look into the Fintech space. Marco, next to his role at Rabobank, Marco is a member of the Dutch blockchain coalition, Rabobank, and Brightlands Techruption. Marco, previous to working for Rabobank, has had senior and international management roles in Citibank, Thomson Reuters, ABN AMRO, and RBS. And as long as I have also been knowing Marco for, he has always been passionate in translating customer demands into technology and data delivery solutions. On top of this, he's also a regular speaker at conferences and publisher of articles on various topics, such as open banking, collaborating with fintechs, and data management, really just to name a few. So I'm very honored for Marco to take the time and join us for today's webinar. This leaves me to introduce myself. So I'm Karen Carpentier. I have joined Matchmaker Ventures back in October. I'm serving here as an associate partner, and I'm working with the fantastic central team in the headquarters here of Matchmaker Ventures in Vienna, and together with our network of senior executives around the world to match corporates with startups, so to really generate business impact on a short-term and strategic basis. For those of you who are joining us for the very first time and are probably hearing about Matchmaker Ventures also for the very first time, I'm going to introduce you quickly to what we do before moving on to looking into the innovation and the collaboration space and doing a reality check. So seeing what is going on in the market. I will finish my part by drawing some lessons learned and recommendations for how to get it right for the corporates to collaborate with the startups. Then I will kick it over to Marco, who will then take a deeper dive on the fintech and also share some experiences and lessons learned from driving innovation at Rabobank and in general what is going on in the fintech space. We will end today's webinar with a Q&A session, and please note throughout the webinar you have the option to send across messages. You have a special chat function for that, so please feel free to send across the messages, which we will then address at the end of the webinar. So swiftly moving on to Matchmaker Ventures, who are we? Well, first of all, as you can see here, we are really in the intersection between the startups and the corporates. And our aim is to really be the global reference for making startup corporate collaboration simple and successful. We have developed a special vehicle for that, which we call matchmaking, where we really drive to connect the corporates with the startups with a short-term impact, but of course with a strategic intent, meeting the objectives and meeting the innovation goals of the corporates. For this, we basically know of two business models in Matchmaker Ventures, and if I briefly walk you through looking from the left to right. So on the one side, moving left to right, we promote our portfolio startups. So those are the startups we work in partnership with to the corporations, and we match those leading edge startups with the right corporate partners, always with the aim to drive concrete business impact from that collaboration. On the flip side, Looking from the corporate side, so walking on the slide from the right to the left, or the bottom half of the slide, we start with the corporate, with their needs and the innovation goals, and then we go out and identify, we validate, and then we matchmake and scale the best startups again and always, at the heart of everything, to drive business impact at the corporations. Now, this model is going to be the center also of the webinar today, and we have a deeper look and a closer look of what is driving the corporation and what is driving the market around innovation. Of course, in Matchmaker Ventures, we are out there, we are talking to corporations and startups on a daily basis, and in addition to our experience and daily work, we want to base our assumptions and we want to base our services and offerings on true facts and really listening to the community and the customers we are serving. So throughout the webinar, you will hear me quoting some facts and figures that are resulting from intensive research that we have been doing in the past and we continue to do in Matchmaker Ventures. In particular, I'm going to cite some numbers of one of the earlier studies that we have done, which is called the Age of Collaboration, where we have interviewed 400 participants in detail, out of which there are almost 200 corporates being part of that research. So I'm looking forward to share some facts from those studies with you. So going into the first part around a reality check, so really asking the question, what is going on in the market space? I want to cite or just want to talk quickly to the global numbers, because very often I hear customers asking, is this whole startup thing going to be the next hype? Is this going to be a bubble? Is it going to explode? I think the answer is no, and the global numbers really confirm it's going to be a sustainable trend. So the global financing number have actually bounced back after a short dip after 2015. They have bounced back to record levels in 2017. And if I were to compare the numbers to 2016, that would actually be a 50% sharp increase on a global level. Equally, the corporates, and I think that's the encouraging part here for the discussion today, so the corporates are also following the trend and are showing us a sharp increase in number of deals of 19% compared to 2016 and 18% in total capital compared to the year before. That said, overall, these numbers for corporate venture capitalists represent 20% of the market share on the global level. 20% of the market share, I think it's good, especially as we are seeing a steady increase from previous years. If I were to cite numbers here, it's around 1% increase on a yearly basis, which I think is still slow, but of course the trend is your friend. But equally, 20% market share means that the majority of the investments are still happening outside of corporate venture capitalists. That said, impressive uptick also in corporate VC money into the private companies. And one could quickly ask, why this is the case? Well, first of all, as you just said in the beginning, innovation is definitely provided by startups, but also, and we have asked corporations, what is the reason for the appetite becoming higher when dealing with startups? And what corporations have actually recently cited in the study of CB Insights, fresh off the press really, in 2018, is that the corporate innovation is still considered to be slow. Only 9% have actually said that from ideation to product launch, they can actually do this in less than 6 months. 60%, say it's taking a good year, and a quarter say it takes even more than 2 years from ideation to launch. And from a perception perspective, corporations find this actually to be rather slow. And that might have also triggered, the increased appetite in engaging and in investigating startup innovation. But so we asked, how well equipped are you in the corporations? Now, interestingly enough, when we talked with the corporations, how well equipped they are, the results were quite surprising. Almost 200 corporates told us, out of 200 corporates, they told us that only 30% feel very or extremely experienced in dealing with startups, and 42% feel somewhat experienced. Of course, we have followed up, those numbers with in detail discussion with the corporates, and those, who fall in the bucket of 42% feeling somewhat experienced. Actually, when we drilled down, the discussion was more around, well, actually feels even less than somewhat experienced, more into the bucket of not experienced. And that might also be the reason why also corporations today are not really seeing the benefit, or haven't been seeing the benefit in the last 2 years when engaging with startups. So we asked them, what was the time frame where you have realized your results that you expected when engaging with startups? And here the majority, 69%, told us, right, they didn't see the results within 1 year. 68% still said, well, not even within 2 years or even more years. And still a large chunk of corporations told us that, well, actually, they have never seen the desired results. Even though on a lower level, but you can also see here the site for the startup, but even on a lower level, but also the startups, said on a maturity basis that they haven't seen the desired results within the first year. So one conclusion to take away from this is an overall poor performance of the corp-up between basically the corporations and the startups, and that the relationship is not yet really fully performing. Now, again, we have asked why this might be the case. And however we turned it, most of the time, it was actually down to human interaction and what I would call probably some cultural frictions. And I think this slide really talks to what is going on, which is literally a mindset thing. So you could, looking at the slide where we have asked startups and corporates to just, give us, the first word, the first association they come up with in their minds when thinking about the other side. You can see some of those words here, and it clearly also shows that probably one side is more in favor of the other than the other way around. So clearly a mindset thing, and clearly a cultural thing that we have been withdrawing from the research done in that area. So to sum it up, we have seen many cultural frictions. Also, the challenge to identify what the real business rationale is between the startups and the corporates for them to collaborate together. And also something I haven't cited as a numbers game, but most of the corporates told us that they are actually swamped with daily business, and it's really often very difficult to set priorities to get the collaboration right. So of course, the next question is, what have we learned from that, and what are kind of the actions to take to really get it right? So the first one I would say is, and that's really the good news, keep up the good spirit, right? Keep up the good spirit, because despite all the difficulties both parties were experiencing, 98 respectively 100% of the corporates and the startups told us they want to collaborate again. So what are the recommendations we can give them on the way in order to make it right? First of all, top management commitment. What we would absolutely recommend is to ensure a long-term focus to prevent the initiative from being abandoned after the first challenges arise. Second, assigning end-to-end accountability and empower and allow for enough time and budget. So whenever the first challenges arise, you really have enough framework to walk through and achieve the desired results. really talking to the human element that we have seen out of the results from the studies and engagement with the corporates. It's around people, right? Great people make great solutions and drive great business. At the end of the day, it's people's business and we are happy about that. Fourth, manage the time challenge by matching objectives with the vehicle you're choosing to really engage with the startups. So the time challenge is an important one, and really, designing the objectives that you would like to achieve when collaborating with the startups. And last but not least, again, talking to the human element, involve the business owners early and keep it that way throughout the entire process. It's only with really creating useful business cases and useful business examples that you will be able to create powerful solutions and adopt them across the organization. So those are some of the recommendations that we would like to give to the corporates in making their collaboration successful with the startups. And those recommendations can probably be complemented and reinforced by a selection of statements that I have actually taken from a recent discussion from the corporates who were sharing their recent experiences from driving and working with the startups. You see a selection of those, on the next slide. And I'll probably let you read through those statements yourself. Just really want to mention that actually the majority of those statements from significant leaders and companies in the market really also talk to the collaboration aspect with regards to the human element and making sure that both parties let each other be themselves, acknowledge who both parties are, know that there are frictions, and put actions in place to overcome those frictions. So those are some of the lessons learned and recommendations I wanted to share with you, what we have learned so far and what we are seeing from engaging with the community. But I'm of course very, very interested to see whether Marco can, or what Marco is telling about the fintech and also what his lessons learned are from driving innovation and startup innovation at Rabobank. So Marco, can I hand it over to you, please?
Yes, Karen, thanks very much for the introduction, and welcome everybody on the call. Before I dive into the presentation, it's probably worth mentioning that indeed, as you also mentioned, to create a sense of urgency in the bank is needed to get traction and to change the organization in those areas towards an open mindset to be ready to partner is kind of a prerequisite. And when we started in 2013-14 or so, we essentially used in the argumentation 3 lines to create that sense of urgency. As one is that all the enabling technology that has become available implicitly means that transparency is going all across the industry. And that's a good thing, but at the same time, it also erodes margins in a lot of businesses that used to flourish. So there is a call for additional and new revenue streams to offset the loss of those revenues that are created by new and modern technologies. Now, the second point is that most incumbent banks have to admit that they're sitting on a back of legacy, as we briefly call it, compared to startups. So a lot of the processes and financial products today, if you had to build them from scratch, you would definitely not do it with solid infrastructures that most banks are still to a large degree working on. And that puts fintechs immediately at an advantage to go forward. And the third argument to create a sense of urgency is the trust level, right? Banks are always telling themselves pretty much that they are the only trusted parties in the world. And as we all know, since the crisis of 2008 to 2009, trust on the relative scale is fading. And at the moment, luckily, we've come out of the crisis quite well, but we're certainly not the only parties that can fulfill a trusted or a trust partner role in the market. Certainly not if you talk to millennials who probably trust the Apples and the Facebooks and the Googles, despite the late roaring events as well as the banking relationship. So trust is not granted, and trust is what you have to earn. So I completely agree with Karen's introduction that fintech is not fashion, it's not fading away, it only becomes stronger. And here are a few snapshots of news that has appeared over the last 12 to 18 months or so. And I just not going to go through them all, but the top end is saying that if PSD2 is triggering open banking in the payments world, that the banks in EMEA and Asia are tending to lose 43% of their retail revenues from payments. Now that has significant impact for all banks with a large footprint in transaction banking. The other takeaway from this clippings is that money is generally speaking not an issue. There is a lot of investment money, not limited to Silicon Valley alone, that is trying to find its way into the industry, and every good idea is fairly quickly, solidly funded to go forward. In addition to that, the regulatory side, the government side on the left is the UK government. I mean, they are a big forefighter for open banking. I mean, the whole design of PSD2 is to create more choice, more competition, that is, for consumers or corporates, and essentially ban the kind of monopolistic approach of a banking license and being the only parties that are able to create money on the back of a balance sheet with certain multiples. So to cut a long story short, money is no issue. It's all across the board, and for the time being, there's a lot of revenue exposure going forward. Now, moving on, one sort of definition question is what do we call fintech, right? Because we've created product, we've improved product, we've evolved product for decades. And in most discussions, it gets a bit blurred that every great idea is immediately tagged as a fintech. And it has helped me, at least tremendously, to say, well, we need to have a shared definition, saying that it's organizations that are combining innovative business models and technology to enable, enhance, and disrupt financial services. That's what we call fintech. So in order to create some logic and some housekeeping in how you manage fintechs, it's relevant that if new ideas are discussed in your organization, to make sure that the logical next step for a standard existing product is managed by the product manager as an enhancement and is not categorized as fintech per se. Now, I already touched on it. I mean, it's across the board, and this slide is pretty much an idea to sort of take your homepage and see what services you as a full service bank are offering today, but then in your own sort of regional footprint is see and try to map the fintech activity that you're working on against the different services that you offer. And it's kind of scary because I wouldn't be surprised that you also find what in this case this HSBC page shows, that essentially for all the services that you offer, there are at least one or two fintechs out there that are trying to compete with you on that particular element, whether it's in the commercial loans, whether it's in the mortgages, whether it's in the payment services, the pensions or the insurances, you name it. There is activity fairly close in your country or in your regional footprint that is competing. Now, what that highlights is that customers have choice, and at the same time, at least talking from our markets, we see a relatively low transition rate. We see actually consumers, certainly in the retail space, it's less than 3% in our markets that are changing banks. And that figure is not even accurate, because if they open an account with another bank, it doesn't always mean that they close the account at our bank and vice versa. But we still sort of waiting for a storm, I guess, that if that transitioning becomes easier, that you could see a lot more movement going across. But this picture is pretty much saying, well, don't take for granted that they come to you for the mortgage, because here are another 5 in your field where they could go to at least get a competitive quote, if not ultimately end up buying the mortgage from. And then the lower bit is more about the enabling technology, right? There is a lot of fintech activity in the enabling space that help you either understand the client better because of artificial intelligence related data processes, or they are improving and fast-tracking your processes in the credit approval space, like the Cabbage and the OnDex of this world, or they're just PSP, payment service providers, as an Adyen and as a sum up. So it's worthwhile doing a little bit of a sort of workshop exercise, I think, around your own home pages, and create these pages for yourself to get an understanding of where the particular fintech activity is taking place. Now, like I said, I mean, the pointers are all green in terms of further fintech growth. As Karen already mentioned, the global investments are phenomenal. This is actually an old slide of 2017, 15 billion invested. I'm told that that's more than the top 100 banks, their IT budgets together. And those working for large institutions know that that is significant money in most cases. So there's no lack of money to make this fintech phenomena really work. The millennials, I mean, they're very positive towards fintech. They're more eager to try out and test things. The half of them actually think that that fintechs ultimately will replace banks. Personally, I think it will move towards a different model. I'll come to that in a second. And it's also relevant to realize that the startup costs of most fintechs have come down significantly. About 15, 18 years ago, you needed roughly 5 million US dollar or euro for that matter to go to a cash flow positive scenario on average. Now we see companies coming out of the startup blocks with 500K and become cash flow positive. That doesn't mean that they go for funding rounds to further expand their business, but that threshold is so low that there's a lot worth trying, basically, without losing a lot of money. And then the government support. I mean, it's not limited to the UK. I think the UK has done an extremely good job in terms of the PSD2 regulation and making sure that these standard APIs come into place earlier this year, where the rest of Europe is still kind of arguing with the Berlin group, hopefully getting us out of the woods to get a standard around the PSD2 APIs. But that's all facilitating and accelerating the growth in the company. Now, about the collaboration, is it a shortcut to innovation? Yes, I mean, you cannot ignore this, basically. I mean, and the mindset that needs to change is where you still find sort of the not invented here mentality is something to argue very hard against. Because there is no bank, and even the large banks are preaching that know it all and are the only ones with the smart IDs. So the smart IDs are very likely to come from outside. And the world is moving at such a rapid pace that development of self-development is always a second best option. But it's good to have, even at board level, discussions that in terms of spelling out your vision, where and maybe not for the whole bank at large, but for those areas in the bank where the strategy is partnering unless, right? Meaning that you know what your customers are after, that you deeply understand your customer desires, that you actually embrace what is relevant for your customers going forward, but that you try to sort of populate those propositions and build these propositions in collaboration with fintech partners. And this is a slide with a lot of very well-known names on it, and a lot of the stuff has been in the press, so there is no confidential information on this slide. But as you can see, I mean, the marketplace API models, I mean, BBVA, Barclays, I think Crédit Agricole is another name that should be on there. I mean, those guys were the first banks saying, well, I see the strength in openness. I see ultimately the upside in opening up the gates for a number of products through APIs. You see other parties like Goldman or Santander, for that matter, who hit a certain fintech element and actually decided to buy it because they felt they could scale it by themselves already with such a factor that it wouldn't be worth to keep it independent altogether. Now that's in the incubator space. You see also Barclays, who has built a reputation in that space, and meanwhile you see a lot of other banks that have followed suit in the same fashion. So whether you are looking to fulfill your needs in the incubation period, in the acceleration phase, or whether you want to extend your value chain and your propositions, you can do that through investments or through other forms of partnerships. But it's worthwhile to build people and build teams that understand partnership management and have sufficient knowledge about the investment side when needed, but also bring it home to the product owners in the bank. So that's a total different dynamic than what we used to until a few years ago. Now here, this is just a brief summary of what we see are the 5 bullets in terms of the fintech land in this year. First of all the blockchain fintech initiatives, they are getting traction. Some of them are technology providers. Some of them are sort of toolkit type of approaches to build solutions. We see in trade good things happening. We are one of the partners in the We Trade initiative that is launching kind of a letter of credit type mechanism for the SME Plus market in Europe. A market that until now didn't have access to like credit insurance in their trading practices. And we've got good hopes that will spread like wildfire and will become a showcase of how blockchain can be used in any risk and payment trading challenges, basically. Then on AI, there is a hell of a lot of activity there. I mean, it's not a single week that I'm not approached with any new name that wants to talk to us. Now that has made really mileage over the last 18 to 24 months. The textual part of AI is well on its way. The voice is led by the large guys like Amazon and Google, also is getting good traction. And I suspect that this year will still be the final sort of proof of concept year, and we'll see the first large-scale AI applications coming into the market in 2018. Now, PSD2 open banking, I've talked about it. That's really well on its way. I think GDPR, from a personal perspective, has come in late in the game in the sense that it is directly related to PSD2. GDPR is quite often communicated as a sort of a fear factor to the consumers or the future clients of open banking. That's not good. Clearly, data and data ownership and consent management is key to a lot of the stuff that we are building and that we are servicing going forward. But we need to think in a positive manner about and in terms of opportunity about consent management and data permissioning as financial institutions, because then we can actually be the glue in bringing the new ecosystem of banks and fintechs all together. Now, a lot of banks think in terms of platforms. That's nothing new, and all collectively we see a growing wave of engagement with fintechs, with those institutions that, like I said, have the organization ready for that. Now, open banking, there's a lot of text on this slide, but it is directly related to the whole fintech phenomena. Because the banks slowly start to realize that if you want to keep all the options open, your development agenda should also start with API first, right? And we, for those who have been around a bit longer, we had 20 years ago a discussion say online first vis-a-vis offline. Then we had a whole discussion whether you should focus on the app or the web. And now it's really saying, well, get the APIs in place for all the products that you're intending to offer before you start building the visual front end in an app or a web going forward. That doesn't mean that all the APIs should be all open on day one, but you at least keep the options open to either build your products on top of your own in-house API or ultimately break it open and deliver it to third parties to develop against. So that is going to build serious. That is going to have serious impact. And like I said, I mean, the underlying intensity of change is really in this chapter, that third parties will be able to directly tap into your payment account engine. And that raises very significant strategic questions to banks in terms of who do you ultimately want to be? Do you want to be the factory producing product, or do you want to be the assembler, assembling product, or do you want to be the customer-facing entity at the end of the day, distributing product and supporting clients front end? And it's very unlikely in the next 5 years that the banks that are used to play those three roles as a total banking concept, that they will continue to do so, as I strongly believe that the value chains will disintermediate, and people will be better at some parts and less good at it at other parts. So the whole notion about the influence of fintech around this open banking phenomena is the one to keep in mind. And I still see that at least at Rabobank, that we slowly see where fintechs were quite aggressive and fighting against the banks 3 to 4 years ago. That scenario is changing in terms of opening up and be ready to partner from both sides. And the win-win is quite often that the fintechs have the focus, the skills, and arguably the better technology on certain propositions, whereas the large banks still have the large customer base, the money to market and to distribute, and a lot of the relationships that we've built is because we find each other in being a significant distribution partner to those fintechs, and by the same time meeting one of these customer desires that these fintechs have quite well organized and are ready to fulfill. So that means in terms of technology, rather than getting on top of the API focus that I just mentioned, that you shouldn't stop with your API management layer to facilitate the fintech space. I mean, it would be really proper to start thinking on top of your API management layer about creating a kind of an app store as a financial institution, so that you can have a scouting capability and find those applications that maintain that keep you relevant for your customer base. Because ultimately, most customers, I mean, they're not waiting for 5 financial inclusion apps or 10 portfolio management apps. They expect from you as a bank to be at the forefront of all of this and do the cherry picking and the selection and come back with the best of breed app in store for them, right? So it's kind of the supermarket concept that I'm trying to visualize there. And that is where I see the world is heading, that banks will partner intensively with those fintechs. The fintechs kind of will come on the shelf of the bank, leveraging the trust and the brand and everything associated with it to go to mass markets fairly quickly and very cost effectively. Right, so I'm just getting to a close with a few slides that saying, well, try to group those fintechs that come on your path, because there is a hell of a lot, and Matchmaker Ventures is doing a really good job in helping you with making that selection, basically, because it's impossible to go after everything and start discussions with everybody. And the biggest challenge I found is to really define in a large organization with the various stakeholders what we are looking for. So one is around the activities that you manage. Try to group them around the platforms, the payments, the insurance, and so on, the SME services, so that in any discussion or any new party coming around the corner, you can immediately position it and have the right people in your bank, in your organization around the discussion whether or not you should drive it forward. By the same token, it's worthwhile considering a partnership program. And what I mean with that is more a solid journey towards these fintechs so that you can manage expectations. Quite often in large banks, the fintechs are talking to half a dozen people over X number of weeks without necessarily having a pre-agreed outcome of what these discussions should deliver. It would be much more appropriate to take from the very first moment the journey on and say, well, I'm going to have you talk to these and these stakeholders, these product managers, these compliance or risk managers whatsoever. And at the end of the 2 or 3 months, we will review what we've discussed, and we will either decide to take it forward or not, as the case may be. But then you're much more to the point and much fairer to the fintechs who live on daily cash flow issues in most cases, rather than keeping them around the woods. So it's worthwhile, not necessarily in these sort of graphs, but these are a few examples to say, well, how can you visualize internally the names that you either are planning to talk to or have talked to or want to keep an eye on in terms of being relevant to the proposition that you're managing. Now that brings me to sort of the last slide. I mean, this is probably a page that most of you are familiar with, but I just want to stress the point that this helps us tremendously. That if you are close from an innovation management perspective to the business owners and pin them down to what they're actually after so that you can describe the value proposition, they're right in the middle. And then from that clear definition of the value proposition, you can then ask yourself the question of what are the key partners out there that can help me deliver that value proposition, rather than in the old days to say, well, can we do a budget in terms of how much it would cost to build this value proposition? No, you should start with the very first question and say, where are the partners? And describe the key activities and the resources that are needed on this left side of the value proposition. Then you swing to the market side and say, well, how does this customer relationship going to look like with this value proposition? What are the distribution channels that I want to use to get it to market? And clearly, what are the customer segments that I try to address? And then ultimately, of course, the revenue cost sides are coming into play, but it shouldn't stop you sort of crunching through these new product IDs and these fintech collaborations in the first place. And the revenue side is also new ground in most cases. The revenue models are changing. It's not limited to monthly subscriptions anymore. We see freemium models, we see premium models, and the use of data to a degree is much more popular in the US, I know, but at some stage we will see in Europe some sort of use of data with customer consent that will also have an impact on pricing structures as we are planning to use. Right? So to summarize, I'm very much a fan of fintech engagement. Do it properly. Make sure you also understand the drivers of these fintechs and understand the management team behind that fintech. We do some checking and use some tooling to measure the strength of the management team of the fintechs before we engage or invest in them. It's also worthwhile sort of acknowledging that most fintechs come forward with bank agnostic propositions. So they are not interested to be bought or to be partnering with only you as a financial institution. Their goal in life is to sort of connect to as many banks as possible. So that creates also from time to time discussions in terms of how you manage that as a strategic partner in terms of managing the competition that in that particular market space. But the learning is tremendous. The spin-off towards the existing product teams for the mainstream product is tremendous, and it has helped us to remain sharp and being relatively fast in remaining relevant to our clientele. So I'd like to leave it to that and hand it back to Karen, and I think we have some time left for questions.
Awesome, Marco. This is an impressive insight into also the intensive rate of innovation that's going on in the fintech space. And I have to say, I really love this business model canvas that you're using. This is exactly also where we start with our services in Matchmaker Ventures and help corporations, right, to really find what they are looking for. And I can totally relate when you say it's probably most difficult to define, right, what you're really looking for. And that's why with the help of our corporate innovation services, we have defined the first pillar, kind of the kickstart, as we call it, where we really take a deep dive with corporates into defining what is the innovation goal. And as you also said, Marco, what is it that the corporation should be looking for before we then move on and, take a deep dive into the matchmaking as such, where we then go out, screen and select the startups, screen the market for any innovation development, and then finally, really around the business objectives and goals described, we then define kind of a joint growth story, and match the right startups with the corporations. And of course, right, we help the onboarding as well. And for those who are probably into owning startups, investing in startups, then we also help to scale startups through our sales acceleration service. So this is really where I would like to leave it in terms of us broadcasting our knowledge, experience so far, and lessons learned, and really move on to some of the questions we have received while Marco, you and me were both talking. So maybe let me pick the question around finding the startups. And Marco, that would be a question that goes to you. So in the fintech space and what you have done, or in the past or now doing for Rabo, is there any geographic focus, in finding the startups? And so where do you find them and how do you find them?
Well, we use a leverage. There's not a straight answer to that question, unfortunately. I think we use a number of databases, some of them from sort of external database providers. We're also working with the big four consultancy houses that have also established databases in terms of tracking startups. Some of them are more investment focused in terms of keeping an eye on the deal flow. That's for my role actually less relevant. I'm more interested to have a quick way to say, well, if I'm looking for something in, say, syndicated loans or in cross-border payments or so, that I can qualify and search who is active in that particular space. I think 3-4 years ago, it would probably be 60-70% US driven. But I think it's swinging around, and it's certainly more than 50% that is coming from the European footprint now as startup activity that we are engaging with. And that's, that's from multiple countries, from Spain, from France, from the UK, from the Netherlands. We got quite a few, 1 or 2 out of Sweden or Scandinavia. So it's hard to pinpoint and to say, well, one sort of valley initiative is more successful than others from my perspective.
Thank you, Marco, for that. I'll probably follow on with one more question for you. One was around, internal hurdles that you might have experienced, right? In you really driving innovation through startups that kind of comes outside of the bank. Have there been major hurdles or any internal resistance that you would like to share? And if so, how did you overcome those?
Yeah, I think we started by sort of acknowledging the fact that you have to free people up to work dedicated on innovation management and fintech engagement. Now that sort of coincided with a program that we manage internally, which we refer to as the Moonshot program, which very briefly is a kind of a campaign that any employee can come forward with a good idea. They can then find people that are willing to work on that idea and then pitch it, and we do run it kind of a competition. So we do that twice a year, and if they win, then they can drop the pen of their current job, which is not always easy, as you can imagine. But then they go into an accelerator program and make sure, or at least get the time and the support, the mentoring to work the idea to a proof of concept, and with ultimately the hope that it goes to a minimum viable product status. So that works perfectly well. But to keep innovation management remote from an organization is dangerous, and we kind of still in the final stage of embedding it back into the organization, because we have a digital transformation office that looks after the digital transformation of the whole bank, of all the existing product lines. And we got an innovation hub that is looking after all the new revenue models and propositions. And it's always a bit of a balancing act to keep these people well connected, because there is a risk of having some superiority, basically, that if you work on the leading edge and all the new stuff, vis-a-vis the good old diesel engine that is producing the revenue at the end of the month. And at the same time, you need to have the work organized. So we use the McKinsey 3 Horizons model more as lingo to determine who is doing what. So if you talk about the first horizon innovation, then it's typical product management today, making sure it goes into the roadmap and making sure it's delivered in the first or the second release of that particular product. Whereas the second and third horizon are people that are working on complete new business models that should deliver revenue streams that do not exist today. And the third horizon is pretty much in the out of the box thinking of AI and blockchain technologies without having a clear concept around the proposition at that point yet. So to mix it all in one role, I haven't seen that working anywhere successfully. But to split it and to sort of silo it too much is a traditional risk in large organizations. So you have to you have to find your own optimum in that.
Yeah, very good. So let me then just swiftly move on to the next question on the line. Let me read it out to you again, and I will start answering the question, Marco, and then maybe if you want to add to that, please feel free to chip in. And the question is, like, part of the problem I have experienced is that corporations are often very risk averse. And among all corporations, banks are most risk averse. Fintechs are startups and many startups fail, probably between 50 and 90%. And some are very successful, and those who are successful are very, very successful. So the question is, what is our experience in dealing with risk and failure? So maybe let me just comment on this, and then please, Marco, feel free to elaborate further. So from what we have learned and what we have seen, first of all, across research sources, the percentage of startups who fail are more likely towards the 90%, which means actually the majority of the startups fail. And how to deal with this failure? Well, I think if you're a corporation, and also this actually goes also for the startups, but is really first step is to evaluate the proposition. Yeah, the proposition really needs to solve a problem. It needs to address a real business problem, and you shouldn't address a business problem of one customer or just a very small group of customers, but really it needs to address a market. I think that's the first one. The second one, and Marco also mentioned this, around the bench strength of the management team, and here come a bit back to the human element. I think the management team of any startup is really a key deciding factor. If you get the management team right and overall, the team in the startup right, I think that's really more than half of the story. So evaluating the propositions, making sure that the management team is fully behind, understands the business, and has a clear vision of how to build out the business and how to grow. Let's face it, startups are small, they are limited in terms of resources and geographic footprint, so there needs to be a plan in place, of how to grow this, because at the end, from the growth, this is where you create revenue, and this is what will eventually, make the startup successful. So I think this is what we have seen so far, and is also what we apply in working very, very closely with the startups we engage with. But Marco, maybe you have other things to add.
Yeah, no, I agree with that. The couple of things come to mind. One is sort of creating the product or the new proposition or embedding the new fintech in your organization. Where we have made mistakes in the past, that it was more about the distribution side of things. That we kind of assumed that we would have to engage the whole sort of account management network to get the proposition to market. Whereas if you would really do it properly, you'd think it through and you would go for an online distribution model with a central support desk rather than engaging the account managers because they happen to be there already. And the behavior in those early initiatives was exactly as Mirek is putting forward in the question, was risk aversion, saying, well, why should I spend time on this new proposition? Because it in 6 months' time, we may come to the conclusion that it doesn't fly, and then I have the reputation towards my clients that we pull the product. So we've seen that, and I'm talking more literally 3-4 years ago than really current. But those are certainly things to overcome. By the same token, I think the market is much more ready to accept an open communication of what you try to achieve. So we are strong believers of the lean startup methodology. Meaning that we are pushing all the teams that are working on ideas out in the streets, literally, with a PowerPoint or a mock-up of some sort to validate the proposition. And like Karen said, to say, what is the problem you're trying to solve? And is this, do you see this as a pain point? And if we would do A, B, C, D, would you tend to agree that this could help either softening or resolving that pain point? And if you can get that supported by 40, 50 client interviews, that to me, in terms of budget allocation and management, is much, much more relevant than any opinion of any senior consultancy office. So we wouldn't have done that 4 years ago for some reason. But the fact that you engage customers, get them in and offer them the cappuccino and the muffin, basically, and make them part of your product development process. I mean, those are huge eye openers. And if you can get in touch with the most critical clients in your organization that have sent complaint letters or have been moaning and mocking about, get them in, offer them that cappuccino and muffin, basically, and engage them in the next product development. And it's not that you gain the customer for life, basically, as a result of it, but you get very vocal and very valuable feedback, and putting that risk chapter in a total different league, basically.
Yeah. Super important, absolutely crucial to the success. And this really takes us on to the last question for which we have time at today's webinar. And let me just also say that all of the other questions we have received and not been able to answer, we will follow up somehow in writing. So the last question really, and you just started, Marco, with talking a little bit about what the startup should be doing. And here the question that we have received is, what would you both, so Marco and Karen, say startups should consider to make this successful, kind of the top 3 things? So maybe I take a go at this, and then feel free again, to add if I have missed anything, Marco. So first of all, the first I would say is probably a message to the corporates and the startups together, and that is both need each other. So it's not like, one is winning, the other one is losing, or one is in need and the other one not. Hopefully those are matches made in heaven, but I think just important is to clarify what means heaven to both sides. So both need each other. But then particularly to the startups, I think I would also say, be patient. And you have something in your mind, how corporations are working and ticking, and how that decision process is being applied across the organization. So in order to be successful in the collaboration with the corporations, you need to be patient and you need to factor this in. So you need some time in order to really get your solution across and start generating material benefits together with the corporates. And then the other thing I would also say is, pick your battles. You have like the startup, you have a proposition that is addressing a particular need. So look for the corporations where this is a really good match, so where it does solve a problem on the business side, and the objectives, that kind of the joint objectives and ideally a joint growth story, can really be addressed. And also, being conscious about the resources that you have available. Walk away from opportunities where you feel and where you see, this is not materializing in any benefits for the corporates. I think those would be the top 3 recommendations I would say to the startup world. Marco, do you have anything to add?
No, I agree. I mean, stick to your own vision, basically, because very likely you come across banks that have immense distribution power, but immediately ask for exceptions to your propositions or tailoring of your propositions. And the reality shows that the successful ones are the ones that are scaling fast on a standard product or a standard platform. So that doesn't mean that you need to stick to your proposition for 100%, but take it into account in a generic way to evolve the product, and don't fall into the trap of customization certainly not at an early stage, and ideally not at all. And then for those banks where you feel, well, is there a journey, is there a roadmap that I'm going through? I mean, spend maybe not in the very first call, but maybe in the second time on the steps that you're both going through, and the investment that you make in terms of time and effort and people, to say, well, what is needed, who are the stakeholders in this, who are the decision makers in all of this, and what are the stuff that we're organizing in terms of workshops, events, or proof of concepts to validate whether we have a win-win partnership opportunity here or not. Because the clearer you spell and the earlier you spell that out together, the more effective it is, and the more time you save at the end of the day, and you don't waste time on opportunities that will not materialize anyhow.
Excellent. So I think there are a ton of good elements to make this recipe for collaboration a real success. So thank you very much, Marco. We are now at the top of the hour, so we are going to close down the webinar. And this leaves me, first of all, with thanking everyone who dialed in today. Thanking for all of the questions that have been put through, across to the chat. For those where we didn't have the possibility to answer them on the webinar, we'll try to follow up. But equally, everyone on the webinar, if there are additional questions, coming to your mind after this webinar, or you just want to have a discussion with any of us at Matchmaker Ventures, please do feel free to reach out. We would very welcome, to continue that discussion and help everyone to make this this super important collaboration with startups a success. And this leaves me with saying a particular thanks to Marco Bosma for making the time and sharing these wonderful and insightful experiences in driving and taking a shortcut to innovation by engaging successfully with startups. Thanks, everyone.
Welcome, with pleasure, Karen. Thanks.
Thank you. Bye-bye.